Welcome back to Teshkid FX for another price prediction update, and in this video I'll be giving you a price prediction update on Quant, whose current price stands at the $112.3 mark, and here on TradingView the market is up by 3.41%. and in this video I want to give you the key scenarios that I expect to play out. And Quant has continued to obey the Elliot wave structures and also managed to break above a key area of resistance. In this video I want to base my analysis on the Elliot wave structures, the Fibonacci's, the key areas of support and resistances, and also draw out any key chart patterns that we have information on this chart. And I'll kickstart the video by giving a brief of what has been happening here on this chart. From the all-time high, we had been seeing lower prices in this massive ABC corrective movement, which took us back to around the $41.2 mark, and after seeing that low we have been seeing a very nice bounce to the upper side, which has been obeying the Elliot wave structures. And jumping to the 4-hour chart so that we can see those Elliot wave structures here on the 4-hour chart, you can see I have this Elliot wave structure in blue, which is a fractal wave within that higher Elliot wave count 1 to the upper side, having our wave 1 high at around the $229 mark. And having seen that movement to the upper side obeying the Elliot wave structures and having completed the formation of a higher Elliot wave count 1, whatever we expect next is the formation of a higher Elliot wave count 2, which is a movement to the lower side over here. And using the Fibonacci's, we can sketch out a minimum target area to the lower side using the fibs, connecting them from the low of the first wave down there to the high of the wave 1, and that gives me a minimum retracement area in the formation of that higher Elliot wave count 2 between the fib level 0.5 and the fib level 0.618, which is the area right here. But I had to extend that target area back to the fib level 0.78 fib level after losing the fib level 0.618, which perfectly lies between the $136.7 mark and the $82.8 mark. That is my target area in the formation of that higher Elliot wave count 2. And after seeing the formation of a higher Elliot wave count 2 come to an end, whatever we expect next is the formation of a higher Elliot wave count 3 to the upper side, which is an impulsive movement to the upper side. And because of that, we also expect to see fractal waves in formation to the upper side in the formation of that wave 3. And here on the Quant chart, there are chances that we might have seen the low for these higher Elliot wave count 2, and whatever we are seeing here on the 1-hour chart might be a reversal to the upper side in what might be forming these higher Elliot wave count 3 to the upper side. So getting into the key scenarios that I expect to play out here on the Quant chart, after making our low in the formation of these higher Elliot wave count 2 at around the $94.4 mark, we have been seeing a very nice bounce to the upper side, which has been obeying the Elliot wave structures. And this is what I'm terming as a reversal to the upper side in the formation of that higher Elliot wave count 3 to the upper side. And drawing out my Elliot wave structure here on this chart, we can have these as the first wave to the upper side, then a wave 2, then a wave 3, then a wave 4, and then a wave 5. And I'm drawing this Elliot wave structure to represent a fractal wave in formation within that higher Elliot wave count 3, which is an impulsive wave. And getting a little bit into the details of the formation of this Elliot wave structure that we have right here, after seeing the high for that first wave, whatever we expect next is a corrective movement to the lower side in the formation of this wave 2. And using the Fibonacci's, we can get to see whether this wave 2 has done the minimum that we expect a wave 2 to do by connecting the fibs from the low of the first wave to the high of that first wave. And that gives me a minimum retracement area to the lower side between the fib level 0.5 and the fib level 0.618. And you can see here on the charts, if I mark that target area, we lost the fib level 0.618, hence extending my target area back to the fib level 0.78, which perfectly lies at around the $101.2 mark. And we have continued to hold above the fib level 0.78, and that is also above a key area here, key area of support at around the $100 mark. Losing that key area of support would mean even lower prices here on the Quant chart. But you can see yesterday we found support at that key area of support, and we are seeing a very nice reversal to the upper side in what I'm terming as this wave 3 to the upper side, which is right here. And because the wave 3 is an impulsive wave, we also expect to see fractal waves in formation, and I believe we are seeing such a structure right here. So zooming in so that we can see this better, I have an Elliot wave structure that has been in formation right here. That is fractal waves within that wave 3 to the upper side, and we can have these as the first wave to the upper side, then a wave 2, then I'm expecting a wave 3, then a wave 4 before we continue pushing higher in the formation of a wave 5 to complete the formation of a higher Elliott wave count 1, which is a fractal wave within this higher Elliott wave count 3, and also that movement to the upper side, that is this fractal wave, can complete the formation of this higher Elliott wave count 3 to the upper side. And using the Fibonacci's, we can get to see whether this wave 2 that we are having right here, and I can change this, the color of this fractal wave to blue, and use the Fibonacci's to get to see whether this wave 2 has done the minimum that we expect a wave 2 to do by connecting the Fibonacci's from the low of that first wave down there to the high of the wave 1. Then you can see the minimum retracement area is between the fib level 0.5 and the fib level 0.618, and I can mark that target area here on the charts like that, and you can see we perfectly touched the fib level 0.5, then saw a very nice bounce to the upper side in what I'm terming as a wave 3. And using the trend based Fibonacci, we can sketch out a minimum target area to the upper side in the formation of that wave 3 by connecting the fibs from the low of the first wave to the high of the first wave, then dragging the fibs to the high of that wave to the low of the wave 2, and that gives me a minimum target area using the fib ratios, that is the fib level 1.618, and that gives me a target area back to around the the $123 mark. So that is the minimum that I'm expecting this impulsive movement to the upper side to do, get back to around the $123 mark, then see a wave 4 before we continue pushing higher in the formation of this wave 5. And using the trend based Fibonacci, we can still sketch out a minimum target area to the upper side in the formation of this higher Elliott wave count 3, that is this wave 3 in red, which is a fractal wave within that higher Elliott wave count 1 to the upper side, by connecting the Fibonacci's from the low of the first wave to the high of the wave 1, then dragging the fibs to the low of the second wave, and that gives me a minimum target area at the fib level 1.618, and that is at around the $151.6 mark. So in case Quant continues to respect the Elliott wave structures and have an increase in volume and also see a nice movement to the upper side, there's a possibility of getting back to around the $151 mark. But for all that to play out, we also need to break above key areas of resistances in between here and continue perfectly obeying the Elliott wave structures. Also taking a look at the indicators to see what movements will be supported. Here on the RSI, we are trading at around the 61 mark, meaning we have a bit of room for us to support any movements to the upper side before we get into the overbought region. Also taking a look at the MACD, here on the MACD we printed a bullish cross down here, that is on the 1 hour MACD, and for now we are seeing a bit of a decrease in the buying momentum on the MACD, and that would mean maybe soon we might be able to print a bearish cross, and that might occur when we are in the formation of that reversal to the lower side in the formation of this wave 4 in blue. So let's be patient and see how that plays out, and I'll keep you updated.